Welcome to the One Hero podcast, where we answer Malaysians' burning questions about personal finance with fact-based answers. Netflix has about 230 million subscribers all around the world. You might be one of them, your friends might be one of them, your family might be one of them. While everybody might love the shows on Netflix, the question we're asking on this show today is, should you invest in this popular streaming service? Today on One Hero, we're starting a new series here on the podcast called Starting from Zero with Stocks, where we examine companies from a complete beginner's perspective and point you to the key metrics you should be looking at when deciding if you should invest in a particular company.
Yeah, so I think for the beginners out there, it's always been this huge leap in their mind about getting into stocks, and it doesn't help that the perception or the skepticism come from a lot of people who ironically don't invest in stocks. They'll ask like their parents, stock is in Chinese they will say 股票 is very dangerous. Stock is a very dangerous, right? But when you ask them, do they actually invest? They don't. So again, it's this perception of how dangerous it is, and it actually stops them in their tracks. So through this series, we are going to take you on a journey, and I would say, safest and simplest way to invest or method to invest, which is buying great businesses at reasonable prices.
Okay, John, so straight into it. What are you watching on Netflix?
Currently, my favorite one, and sometimes I rewatch, is actually Drive to Survive, the F1 series. Now it's into season 5. And
Wow.
one of my favorite ones.
What is the series about?
It's about Formula One.
Oh, okay, just like all about Formula One.
So it's a documentary on all the Formula One teams. So they'll talk about, let's say one episode, they'll talk about Max Verstappen, or they'll talk about Lewis Hamilton, or they'll talk about the Mercedes team or whatever. And I feel why I like about it is because it's very raw, one. Second thing, it talks about competitiveness, and then at the same time, it talks about team working together as a team. And last but not least is really how do you stay competitive and yet be professional as friends? Wow, that one, I tell you, is something that is not easy to do. And how do you maintain peak performance, race in, race out? Because they race every 2 weeks, or sometimes race every week,
Wow.
And sorry, I'm a little bit of a car nut lah. Can you imagine driving at 300 kilometers an hour and you know exactly by the corner by a timing, because you can't see, it's so fast. So when you come to a corner like a hairpin, right, you virtually is already mapped in your head, in your muscle, So I know I'm going to hit my 5th gear, and then I got to go down to 3rd gear, tap, and then you make a turn. So yeah, so sorry. But that's
interesting.
Yeah.
I mean, personally, I used to like watching the crime documentaries there. Unsolved Mysteries, I think now it's into season 3. Do you watch those like crime documentaries?
Oh yes, I love those. There's one, but I don't know whether on Netflix, Behavioral Analysis Unit, BAU. They actually talk about serial cases, serial murderers and all that. But
yeah. So super like interesting stuff on Netflix. I think most people are like us, John. They can probably name few movies or show that they watch on Netflix. They love it. I think Netflix must be, I think it is, right, the first streaming service that's available.
Yes.
Now so many more, but the production there has always been quite good, and the scripts, everything, we can find something we like. I think now the hot show is like Physical 100, right? The Korean one.
Correct, Physical 100, and
so
in the past, Queen's Gambit.
Yes,
Gambit when it first came out,
Yeah, so many, like millions and millions of views on all of those shows. So I think as a subscriber, we can all, we love Netflix. Okay, but now today, we want to put on the investor cap instead. Okay, so now let's switch from a Netflix subscriber and think like an investor. So John, if I am someone who doesn't know anything about stocks, which I am, I don't know how to analyze stocks. And I think, so many people are on Netflix. Everyone I know has a subscription. I love Netflix. I love the shows on Netflix. Does it mean that, I should invest in Netflix? What are the things that, as a beginner, I should look at?
I think it's a fantastic question, and I'm going to borrow this phrase from Peter Lynch, one of great investors that I would consider them as my eyes into the world of value investing. So he actually said this: if you like the store, you likely like the company. So what it means, if you go to a, let's say, okay, Parkson is not a very good example, but let's just say it's a Parkson, right? In the heydays when departmental stores was the in thing, you'll find everything there. Chinese New Year, you go there to shop, Hari Raya, you go there to shop, right? So if you like the store Parkson, very likely the business of it will be great, right? So before we even look at the key metrics, I think I want to introduce the very basic notion of investing. So why do we invest? We invest today in the hope that our $1 will be a $5 or $10 in the future. Now, for something to be worth more in the future, there must be a reason for that, right? Now, if you buy a car or phone today, 5 years from now, I know you use Apple products. I also use Apple products, and thank you for contributing to my dividend as well, Louis. So
You're welcome. You're welcome.
5 years from now, even though there is a residual value for Apple products, do you think it will hold up the same price or be even higher 5 years from now, Louis?
No, for
No,
sure.
right?
No.
Definitely not, right? Because it loses value as time passes because it's wear and tear, scratches on your phone. I'm using a phone as an example. You can't function properly. Maybe, I've seen electronics that can last 10 years, but by then it's either very slow, very clunky. Okay, now, if you buy a property, which is different, because of maybe land scarcity, rising cost of material, inflation, properties generally tend to increase in value over time. Now, what about stocks? What is the underlying asset behind a stock? Is actually I prefer to use the word equity, Louis. Why? Is because you own equity or shares of the company, ownership and partial ownership of the company, and that's why the technical term that most people use in the finance is as equity. So it's for me, it's a more accurate representation of shares or stocks. Now, when you buy a share, literally you're buying an equity into the business. And our job as an investor is actually to reasonably predict if this share or equity will be worth much more in the future. So now you think about it, the question you asked me is, how do I go about buying a share, whatever? If you think along the lines of buying a business, then it makes it more logical and reasonably easier to deduce what is the worth of a share. Because you see, what you're trying to do is you're trying to buy $1 worth of business for 50 cents. Okay, I'm going to repeat that. Okay. You're trying to find a business that's valued at $1, but you're trying to buy it at 50 cents. I don't know whether I'm making sense to you so far, Louis.
I mean, it feels like stealing.
It feels like it's a steal, right? Yeah.
Yeah.
You'll be surprised sometimes how much opportunities the market actually gives you for a steal. The problem is most people, I feel, don't get it is because one, they don't have the right mindset. Two, they have insufficient skills to actually take those bargains or steals. Okay, so the problem is the introduction for most people when they come to the stock market is this, Louis. Even for you, when you think about the stock market, what's the first conjurance of it? What's your view of it?
The first thing I think about is charts, no?
Charts, right? Red line.
Correct. If I look back, like
the
first introduction, people will, like if you can predict the chart movements, then you make money. Yeah. and remember, John, I think we discussed this some time ago that you had a client who was introduced to options before stocks. Was it a client?
Yes.
I just had okay, so I just had this conversation with a very good friend, childhood friend of mine, just 2 weeks ago.
Okay.
And she was just telling me about the same thing, that she was invited to attend a course where they're like, oh, there's something better than stocks, options. And then she has never ever bought anything in a share in her life. And here they're selling a course around buying options and why options are better than stocks. Without realizing.
You know options, you don't own the stock.
Yeah, yeah. Mm, yes.
So
So I was thinking, okay, you never buy, you have never bought a share in your life, and here you are thinking about this course. Of course, she didn't buy it lah, since she was
thank
quite
God,
skeptical. Yes,
thank
yes,
God.
she's a very smart lady.
Yeah,
So thank God for that. Yeah.
yeah,
Yeah. So
yeah.
I think a lot of people have that kind of introduction to investing. I think very, very removed from the business, in fact.
Correct, correct. Actually, the best way to make money. I'm not saying the other styles of trading, in and out options don't make money. Don't get me wrong, but the skill set required for you to do options is much much more than that of the basic stuff itself. So the analogy I would like to give to your friend is, don't start to run when you don't know how to crawl.
Mm.
It's like a baby. So if you don't know how to stand, crawl, stand, walk, then only you start to run. Options are people who are running and sprinting. The problem is running and sprinting, you also need to train.
Yeah.
So, yeah, yeah. Okay, so I normally get people, introduce to people this first is because that is the introduction most people get into the stock market. It's either a chart or it's a share price, okay? Now, I can tell you one thing, a $1 price, okay, people think that $1 is cheap and $100 is expensive. That is so far removed from the truth, but we'll get there, okay? So the basic 5 questions, so these are my 5 question checklist, very basic stuff, okay? Obviously, when you go into more serious investing, the checklist gets longer and longer because you ask more detailed questions. But for a beginner, if you can answer these 5 basic questions on any stock you intend to buy, I think you are almost 80% there. You're not
Mm.
completely 100%, but you're 80% there. Okay. So the first question we do is, what does the business do? How do they make money? So if you think about Netflix, how are you paying them and how are they generating sales or revenue? So you're paying them a subscription, correct?
Correct.
A subscription in exchange for what?
Access to movies, access
Access
to
to
shows.
access to shows. So in a way, accessing their library, lah, content
Correct.
library,
Yes.
right?
Giving
So
myself entertainment.
correct. So this is what we verbalize or what we think it is, but how do we confirm? Because it's still an opinion of yours and an opinion of mine. But what is a more accurate way of determining is actually go to the website. Since it's an online business, how do you find out the answer to what do they do? So you go to Netflix, and instead, because I have Netflix installed on my, my tablet, because it goes straight into my movies, so I'll just say Netflix annual report. Okay. And once you go to the annual report, right? I know there's a lot of things here, but what you can find is every year, most likely, they'll categorize a report card. So you think of the annual report as a report card that you give your parents when you're in school, but this is a report card that they give the shareholders, people who own shares or equity in the business, right?
Mm.
So from here, you can see here, what do they do? Instead of you trying to read the annual report, which can take you sometimes an hours if you don't know how to read what are important things, you may want to go into things like this. Profile. What do they do? One of the world's leading entertainment services with 231 million paid subscribers in over 190 countries enjoying TV series. So from a one sentence, you kind of already get what is Netflix's business model. Okay. So what business do they do and how do they make money? So in a way, they are paying subscribers from 190 countries to access their TV shows. And if you are a Netflix subscriber like you and me, especially the audience, there's different tiers of your paid membership. The lowest tier, mid tier, and the highest tier. The highest tier is, I think, 5 devices, 4K resolution, whatever lah. So that's how they make money. Okay, that's first question answered. So within that first question, what business do they do and how do they make money? Let me use another simpler analogy. Do you like ice cream, Louis?
I love ice cream.
Okay. What if you own? Okay, let me use a good one. Inside Scoop lah. Since it's the ref, I don't know whether in Miri there's Inside Scoop. Is there Inside
No,
Scoop in Miri?
no, unfortunately, we don't have inside scoop here. They should come here.
They
So
should
if
come.
anyone is from inside scoop, please come to Sarawak.
Yeah,
Especially
I'll call
me.
it. I'll tell Mr. Loy now. I mean the majority owner now, lah, right? The farm fresh owner,
Oh,
right?
okay. Yeah.
Yeah. Tell Mr. Loy, hey, go to Sarawak or
Yeah. There's demand.
bargaining market. Okay, so let's just say you are, instead of Inside Scoop, you are Baskin Robbins. Okay, let's just say you are the owner of a Baskin Robbins franchise in Miri Louis. Okay, so as an owner, what are the things you would want to know if you are selling ice cream?
Cost of raw materials,
Okay, what else?
rental,
Rental.
how much I can get from selling the ice cream, what's the
Okay,
demand like,
what's the
prices,
demand? Ah,
competition,
hmm,
what are the competition, what other ice cream shops are around me, um, other things might be like what locals like,
yeah.
flavors that might appeal to locals, marketing, how much marketing do I need to do, like are people familiar with Baskin Robbins around this area, or do I
Hmm,
need to push local marketing?
great. So if I were to simplify it even further, let's just say you covered actually almost the whole spectrum, which is from the cost side as well as the demand side. So I'm going to press a little bit further on the demand side, right? If you were to manage the ice cream store, would you think about what flavors sell better? Whether it's strawberry, whether it's chocolate, and all that kind of thing. Because in a way, if your strawberry flavor is just out of this world, real strawberry taste, real strawberry texture, right? Marketing kind of settles itself because there's word of mouth. Someone who loves strawberry, they'll
Right.
tell their friend, "Oh, this is a fantastic strawberry ice cream, right? You better go there, right?" So, as a business owner, these are some of the business metrics that you can think of. The demand for your products. Does strawberry sell better than chocolate? Does green tea sell better than chocolate? Things like that. Which branch? Let's just say you have 3 branches. Which branch actually sold more either because of foot traffic, or either because of convenience, either because of these factors. So these are the kind of things that different industries will have different metrics. So like for Netflix, we would think that okay, 190 countries. Do people in these 190 countries watch more series? Do they watch more movies, long form movies, 2-hour movies? Do they watch more series? How do you get them hooked on streaming? Is it because of a certain genre? That means, are there more kids watching in a certain country? So like for India, India, I don't know if you're aware, in terms of sports, the whole of India or Pakistan will stop for the day if there's a cricket match.
Oh,
The-
yes, I know
yeah,
that.
yeah. So the whole of India will come to a standstill if there's a Pakistani and Indian, test match, right? So
Mhm.
for them, sports streaming will be huge, right? Then if you go to somewhere like Indonesia and all that, I'm not too familiar with the Indonesian streaming nuance, but those are the kind of things that you would understand as an operating metrics for each business. In this case, Netflix, right? Now, I have to warn you, sometimes these metrics are not readily available because some of these are competitive secrets.
True.
Ah, yeah. So, like for Netflix, why would they want to share all these statistics with a competitor like Disney Plus? Because then Disney will tweak their offering, tweak their pricing, tweak their genres to try to steal market share away from Netflix, right? And last but not least, on question 1 is, what does the business do? How do they make money? Is that your detective skills will differentiate you from a mediocre investor to a great investor. So everyone needs to turn on their Sherlock Holmes hat. Because you see, right, investing is not just about being very good at numbers. A lot of people think that, oh, I must be very good at numbers. The first question, what do the business do? What do they make? I have not even talked about any numbers. Yeah, maybe number of subscribers, but that's basic arithmetic. 231 million, let's just say you times it by $20 a month, right? That's not heavy accounting, right? Yeah. And I think more importantly is, if you were to be a better detective, that's where you actually are likely to get better returns. Yeah.
Mm.
Okay. So the next question I would ask after what do they do, how do they make money, is are they actually profitable? Because like what you said, you want to make sure you have cost, you want to make sure you have demand. But after settling the demand side, people buy your products. What's your cost? And after netting off your costs, do they make money, right? So I usually, for free, if you want free information, one of the best starting points I feel is actually this. It's free. It's called Yahoo Finance. So what I'm
Uh,
going to do now, yeah, because what I want to know is there's two ways you can get the financial numbers. One, you go to Netflix, you download the annual report, or you get the financial statement, right? But the thing is, you are actually getting only 1 year's of financial statement,
mm, mm,
all right, or 1 quarter, whatever it is. Now, what you want to see whether they're profitable is you don't want to see whether they're just profitable now. You want to see whether they'll be profitable in the past and are they likely to be profitable going forward. That's our job to determine, right? So the beauty about Yahoo Finance is that they have a historical set of numbers for you. So you go ahead and you type Netflix. Okay.
Don, just one question. Like, since we're looking at these like reports, how accurate are they? We know that some information are hidden, right?
Oh,
So we
in
can't see
terms of the annual
everything.
report,
Yeah.
there are actually certain disclosure rules that the SEC for US Securities and Exchange Commission that actually mandate you to disclose. So for an annual report to be released and published in public, they actually have to go through many, many eyes. The reporting accountant, the auditor will have to sign it off.
Mm.
So if there is an inaccuracy, the guy who actually signs it off may even go to jail because of false
Ooh,
reporting. Yeah, they lose their license, and worse, they may even go to jail. So
wow.
in
Okay.
terms of accuracy, yeah, I think it's the doubtfulness of the accuracy. These are all governance in play lah. Obviously,
Mm,
people can still do fraud, but people
mm,
who fraud it, knowing full well it's actually they're going above the law already lah. Yeah,
mm.
yeah. So I
Okay.
hope I answered your question about accuracy.
Yep. Yep. Got it. Got it.
Okay, so now Netflix. Now, don't worry. I know it's like overwhelming number, or open bid, ask, whatever. Okay, forget about that first. What I want you to go to do is you see there's a tab that says financials over here. Okay, financials. Okay, you click on that, and you will see they have given you a breakdown of the last 4 years or 5 years of their financial history. So revenue
What?
just says, sorry,
Sorry. What's the TTM?
TTM stands for trailing 12 months. Okay,
What
now
does that?
what does trailing 12 months means? Okay, financial numbers are actually reported every quarter.
Mm-hmm.
Every quarter. That means if your financial year end is actually in December, which it is, it's 30th of December, all right? 30th of December. Remember, this is American date format. So it's month, date, and then year, okay? So at the end of the year, it's when Netflix reports their numbers. Okay, so what date are we in right now? We're in March, no, April. Okay, April.
April. Yeah.
So April means I just ended the first quarter of 2023. Am I correct?
Correct. Yes.
Yes. So in order for me to get an annual number for Netflix, I probably have to wait until January or February next year to get the whole year's number, right?
Mm.
But because I've already ended my quarter one, okay, so in somewhere in April or end of April, they will report this recently concluded quarter one number, okay. But I want to know if I were to compare year on year, are they actually growing or declining? But I cannot wait until end of the year, mah. So what they'll
Mm.
do is they'll take quarter one this year
Mm.
and they'll take the 3 quarters of last year, which makes
Uh,
up 4 quarters. So
I
they will
see.
take quarter two, quarter three, quarter four of last year, and then
Mm-hmm.
take quarter one of this year, and that makes it 4 quarters. So that's why it's called trailing 12 months of result. So when you
Okay.
come to, let's just say, July, which is the end, June, which is the end of quarter two, okay, and then let's say you read the numbers in July, the trailing 12 months will be quarter 3 of last year, quarter 4 of last year, quarter 1 of this year, and quarter 2 of this year. So they makes 4 quarters, another trailing 12 months. Am I making sense to you?
Got it. Yep.
So it's rolling lah. It's rolling all the time. So you
Mhm.
always get the most updated full year results based on the 4 quarters. That is what we call rolling 4 quarters.
Got it. Can.
So in this sense, right, because they haven't reported quarter 1 numbers, you see that the number is exactly the same as this last year's numbers. Because
Okay.
quarter 1 just ended, ma. Today we're recording is early April, ma. So the quarter 1 ended in 31st of March. Okay. So usually they are given about a month to actually tidy up the quarter numbers and then report.
Got it.
Got it, right? So when you probably log on again in I think end of April or May, you will see this number change. It will be different from this guy already. Because
Okay. Very
yeah,
interesting.
very interesting, huh? Okay, good. So this is, you read the numbers from the right to the left, in a sense that this is the oldest year, 2019, 2020, 2021. As you can see, right, their sales or revenue is also sales, is actually growing. 20 billion, 24 billion, 29 billion. And you remember lockdown, COVID, right? They actually, technically, they should have made more money lah. 2021, they did lah, almost 10 billion extra lah, because everyone's locked down, everyone wants to watch Netflix, right? At home, they got nothing to do, right? So yeah, so this is their sales. Did they make a profit? You have to go down here. Can you see here that says net income to common shareholders? Yes. Okay. This is the line where they actually make a profit or loss. So in this case, they see 1.8 billion, 2.7 billion, 5.6, and 4.9. Now, why did profit came down when sales actually went up? In between is actually your cost. Between the sales to your profit, in between this is actually your cost. So as you can see, right, they spend much more in terms of costs comparatively to here, right? In terms of cost of revenue, now I'm not going to go too deep because I don't want to overwhelm the audience out there, but cost of revenue just means the cost directly associated to creating the product. So if you're a manufacturer of toys, right, all the manufacturing costs that either the plastics or the metal or the wood that goes into manufacturing of the toy will be lumped into here. Different companies will have different ways. And then when you minus off that cost of the goods, right, you get this thing called a gross profit. From there, you need to also net off this thing called your operating expense. Now, what does operating expense means? Your salary for your staff, your marketing costs, logistics, costs that are not directly related to manufacturing or producing that goods is actually lumped into operating expense. Follow me, Sova?
Yep. Got it. Yeah.
Okay. So once you minus off, then you got to pay tax, and then at the end of the day, how much is left over as profit for the company? Okay. So in this case, I answered the second question: are they profitable and financially stable at doing it? So that's why I don't just look at 1 year. I try to look at a historical number. So in this case, wow, 5 years in a row, profitable. Okay. So far, so good, Louis.
Yep. All good. Yes.
Okay. So this is the free one. Obviously, there are much more elaborate or more detailed places where you can get the numbers. And one of my favorite is actually this company called TIKR. So I'm a subscriber. What you're looking at is the professional version. Okay.
How much is the professional version?
The professional version is about $15. I know, 150 a month. No,
Dollars.
wait. Yeah, 150 ringgit a month. Yeah.
Ringgit. Okay.
A ringgit. So it's about 30, if I'm not mistaken, 30 or 40 US dollars a month. I can't remember exactly how much, but I know I pay about 2,000 ringgit a year for it. But it's well worth my time because, well worth my money because it has a listing of all global stocks. So you want Hong Kong, US, Malaysia, everything is in here.
Oh, interesting.
Yeah, it has 140,000 listed stocks, quoted listed stocks on it. Yeah. So some of these financial data providers, they only do US, or they do only Asia, or it depends, right? It really depends. So you got to shop around, and in essence of time, I'm not going to go through all of it. I think maybe it even warrants another episode. Who knows? But yeah, so I use TIKR because it's very fast and it has sufficient information what I need. This is not just my only one. I subscribe to a few data providers. I actually have 4 subscriptions for different data
Mm,
providers. Yeah, but
wow.
obviously because it's my full-time work. But yeah,
I mean,
so
but do we need it? Like, if we are not investors per se, do
full-time.
we think?
Just if you just start, don't go out rush and buy a subscription first, because you're not, if you don't know how to read finances, you don't know how to use the tool. I would say a lot of free ones are already available, like Yahoo Finance. I think
Mm.
upgrade to the skills where you know how to read financial statements well enough, then you start buying these subscriptions. But for me, if you are invested full time in stocks, you can't survive without it. Even if you're like, let's just say you're a freelancer, but you invest in stocks directly, I don't understand how you can survive without one of these. Yeah, because it
Okay.
means that you will likely be reading annual report one by one, keying into an Excel spreadsheet, which it takes up a lot more time, right? So can you
Mm.
imagine, right? What they do is how do they get these numbers? They'll go and get an annual report. Someone will have to key in the numbers from one annual report. So one line here is one annual report, 2 annual reports, 3 annual reports. So someone's got to
Wow.
key in all these one by one.
So, John, like, what would be the benefit of something like TIKR over like Yahoo Finance, though?
Oh, because TIKR is much more detailed. Instead of only 5 years, this gives you can stretch it all the way back to 2002.
Just like also like just more data, more
More
historical data,
data,
longer
you've got a
timeline.
company overview. So for me,
Ah,
right, it's like a
okay.
one-stop center for all the information you need,
Mm,
right? You can even have ownership. You know who are the owners of Netflix, who are the
mm,
investors of Netflix, especially the top 30 investors. So you see, they listed all the way through 3,668 investors over here. So you can drop down 200 per page. You can see who are the investors and how much do they own of Netflix. So I know a lot of people buy or invest into things like Stashaway, right?
mm,
Stashaway or BlackRock iShares and ETF.
mm.
So how do you know whether which one owns Netflix? You can see here lah, Vanguard Group, Fidelity, BlackRock. So most likely these are ETFs of BlackRock or ETFs of Vanguard owning shares in Netflix. Am I making sense?
Yep, got it.
Yeah. So T. Rowe Price also very big. Capital International. Wow. Poland Capital. Okay. Fisher Management. So yeah, all these, you see, these are all is what we call institutional investors. For companies this size, right, you hardly see what I call individual investors. I don't know whether they can. Here's the beauty of TIKR as well. You can sort by investor type, So you can see individual investor. Let's see, yeah.
So like my question is, does it matter like the kind of investors we see on this page, John?
Oh, it does. It does. It does a
Mm,
lot, a lot. But I think I wouldn't do justice to go deep into here, because
mhm.
that on its own can actually be a few topics on its own.
Yeah,
Yeah.
just a curiosity, because I was wondering why they would let you filter by investor, right? So it must be like
Yeah.
some.
It's mandatory disclosure.
Ah,
All companies is mandated to disclose all the investors, especially what we call substantial shareholders.
got it, got
Anything
it.
in Malaysia, anyone with more than 5%, you have to disclose everything. And you also have to disclose your top 30 shareholders. So in annual report, any annual report anywhere around the world, there's a section that dedicates itself to shareholders. So that's why this information is very important. That's why they put it here actually.
So yeah,
Yeah.
I think yeah, I can see the value now. Just like having everything that's important at your fingertips, right? With
Correct.
TIKR.
Correct. I don't think they have shareholders for Yahoo. I mean, it's free, so you don't expect to have, a lot of things there. They have historical data on share price. There's a small profile on the company, who are the owners, who are the key management, financials. There's some okay. So Okay, this is this I should have showed this page, but this is actually all the analysts that are actually covering Netflix. So at the moment, current quarter, March 2023, there's 32 analysts covering it. This is the estimated earnings per share that they are trying to estimate. Okay, now
Okay,
that's why I
so
said actually.
what is who is an analyst here though?
Okay,
Who is
so yeah, I realized I just opened a can of worms, but okay, so
just briefly, very, very
yeah,
briefly, like who is the
analysts
analyst? Why does
are
this
people
matter?
who write reports about a company
Mm-hmm.
and they actually sell the idea of the company, sell the idea of you investing into the company. So that's
Okay.
why they're called sell side analysts. So they write a report and they say this company is good for you to invest or whatever. They're selling the idea of investing into the company to either institutional investors. So in Malaysia, we would think of people like your EPF, your QAP, your mutual funds. So they will write these reports to sell, and how they make money in return is you pay them brokerage. Because when you buy and sell a share, you have to pay someone to broker the deal for you, to broker the share for you. That's why you log on. When you log on to, let's just say, your trading screen, when you're paying that brokerage, the institutional guys pay analysts like this to help them write reports. So there's a stock idea. That's why they're called sell side analysts.
That's interesting. Okay.
Yeah. Okay, I hope I didn't go too deep into that.
No problem. Just a
Yeah,
brief introduction. Yeah.
yeah. Okay, so once that is done, okay, I'm coming back to the question of, do they actually, so Morningstar is another one. You can get 5 years data for free. It's a little bit steeper in terms of learning curve because there's overwhelming information on the page. But I would suggest people to start off with Yahoo Finance. I feel very easy interface, very quick enough to get up to speed. Okay. So that's the second question. Are they profitable? Are financially stable doing that? Okay. Now, the third question I would ask is kind of related to the first question, is that who is the audience and how big can this market grow? Okay. So what do we actually look for is like, who are the customers of Netflix and how are they likely to actually grow their customer base? So I'm going to introduce two terms. The first one is this thing called a total addressable market. So what does total addressable market mean? A total addressable market means, like, for Netflix, who are their potential customers, do you think, Louis?
At this rate, I think they're trying to target everyone who has
Correct.
like, internet access. Yeah. High
Spot
speed
on.
internet access.
Yeah, internet access. So, yeah. So if we are optimistic, all right, right? What would be the likelihood that is there a possibility that Netflix captures the total global population?
Total, I would, at this rate, maybe not, because I think not everybody would have internet access. But I think if we narrow it down to anyone who has high enough internet access speed, right? Then I think it's possible. It's possible.
All right.
But of course, there are also market forces that may interrupt with that goal. Yeah.
Precisely. So let's simplify. So you are spot on. Anyone with an internet access, right? Because YouTube has like how many billions of users, right? So
Yeah.
right now they have 231 million paid membership. Now let's look at the global population. You're talking about 6 billion, right? Now out of 6 billion, forget China because China runs its own internet. There's a lot of censorship bad. So let's forget about 1.3 billion, okay? Then you've got India. India is 1.3 billion. So even capturing 10% of India, 10% of India is what? 130 million, correct? So 10% of India and another 10% of the US. The US is about 300 million. So 10% is 30 million. Okay. So we go around these countries, right? And we say that, oh, what if Netflix just, instead of capturing 10%, went to 50%, whatsoever? Do you think they can reach, okay, possibility, yeah? Probability and possibility, yeah? 1 billion paid subscribers?
Yeah, I
One
think they
fifth of the
can.
world? They can, right?
Yeah,
Technically,
possible.
possible because if
Possible.
everyone
Yeah.
gets internet access or mobile device, they can be
Mhm.
potentially a subscriber of Netflix. That is one example of how we look at total addressable market. That means, right, anyone with an internet, with a mobile device, technically can be a client of Netflix.
Mm.
That is the potential addressable market. Now, why is that important? Because it actually lays the foundation for the next question. What is the potential scalability of this business?
Mm.
It is actually, okay, compare this with um, Inside Scoop. Let's use Inside Scoop. Something everybody knows. Between Inside Scoop and Netflix, which one do you think is more scalable?
Netflix.
Why?
Firstly, it's digital, right? It's
Mm-hmm.
digital. Digital products tend to be scalable,
Yeah.
much more scalable, cheaper to scale. If you were to scale Inside Scoop, you have to probably like, yeah, the ingredients alone, I would say it's a headache to manage, right? So it would be much harder, more expensive to scale in each country. And I think even in terms of competition, right, the barriers of entry for ice cream is quite low.
Yeah.
Right. So currently they're in Malaysia. So let's say if I'm not sure if they're in Singapore actually.
I'm not
Yeah.
sure
So
too, but
let's make the assumption they're not yet in Singapore
mm, mm,
and they want to penetrate into Singapore. They also have in Singapore they have their own local ice cream
correct.
makers as well, right? So there's also a lot of competition there. So I think in terms of scalability, Netflix definitely has the upper hand here. Yeah.
Correct. So you already pointed out a lot of the good things about the struggle or the bottlenecks of scalability. Can you imagine, right? Local flavors. You go to Europe, try selling a durian ice cream flavored thing in Europe. It's not gonna likely it's not gonna work, right? So cultural nuances, hiring staff, legislation, all these kind of things play a factor in scalability
Mhm.
of the. Not to mention, it has to have a physical store presence. You can't sell
Mhm.
ice cream digitally, right? Like what you pointed out, right? So the point I'm trying to bring about is the question. Back to the question I've asked: who is the audience? How big can it grow? And because it's a digital business, scalable business, as long as you've got internet, as long as you've got a mobile device or even a PC or a TV, you can already scale this business as compared to someone like Inside School, physical location, all that kind of thing. Now, why is this important? Is remember the first notion that I talked about as an investor. What are you? Why are you investing? You're buying $1 of a share of a business and hoping to make $5 in the future.
Mhm.
But for it to be $5 in the future, that means they have to bring in more sales and they have to bring in more profit. Now, I'm actually evaluating or going through the steps to determine whether can they actually grow 5 times the way they are today. And that's why it links back to this question of what is the addressable market? Have they hit saturation? If today you tell me they have 1 billion subscribers, right? I'm like, okay, that's probably the cap of human population who has an internet connection. You see what I
Mhm.
mean? So the potential of them to grow is less probable than where they are today. You get me?
Mhm.
So I'm constantly asking myself this question: can they still grow? Is there still other audience to tap? Because the moment they hit that growth saturation, right? Then for them to grow business, what other things they have to think about? That the only one easiest way is to think of increasing prices. If not, what how else? But that's gonna be a lot more friction than getting a new
Mhm.
subscriber. You see
Mhm.
where I'm coming from?
Yeah. Or like even shifting their entire business model, like
Correct.
in going into new verticals. But again, there's friction, there's investment. You
Correct.
have to answer to stakeholders as well.
Correct. Correct. Actually, they're now going into gaming. They're trying
Mm.
gaming,
Yep.
dipping
Yep. They
dipping
are.
toes, and let's see that, right? So for the audience out there, hopefully that I've not lost you yet. So we're at question 3. The first question is, what does the business do and how do they make money? Second question is, are they profitable and financially stable while doing it? Or right? running this business. The third question is, who is their audience and how big can they grow? And I've introduced terms like the total addressable market and their potential scalability. Now we move on to the fourth question, which is for me also quite key. Are they cheap or are they expensive? Okay, now before I go into that, right, Louis, can you compare the price of a grade A chicken to Wagyu A5 beef or not?
Cannot, no.
No, right? Chicken, even though no matter how good they are, the price, I doubt it will be the same price as even half of that of Wagyu A5 beef.
Yeah. I mean, again, one is like a poultry, right? So another is beef, so
Yeah.
different categories, even of meat.
Correct. And that's, if we were to choose to compare like that, it's like comparing apples to oranges, right? So a $1 company selling apples can't be compared to a $1 company selling oranges, even though the price is the same.
But I think, John, it's easy to think that each company is the same because you're just looking at numbers, right? When you just look at charts and it's just a number on the screen, it may feel like they're comparable in that way. Yeah.
Exactly, and that's the notion or the myth that I would like to debunk, because the problem is when you log onto a trading screen and you see what you see price. So the problem is when you look and you only benchmark price, the common denominator, you kind of switch off to see that, hey, Netflix is very different from Farm Fresh, or Dutch Lady is very different from Ace Hardware, It's a different business altogether. But the problem is the common denominator being used when you log onto your screen, your trading screen to buy stock is price. And therefore, I want to debunk this notion that price is really arbitrary. It's arbitrary because the benchmark being used shouldn't be used as the benchmark being used. Instead, you should be saying that, hey, is this company selling ice cream? If this company is selling ice cream and the share price is $1, can I find another ice cream company that's selling to me at also $1? Now, let me ask you, if you were to compare, since we're on Netflix, right? If I were to tell you Netflix has 231 million subscribers, okay, they make how much money? Let's see. Let's do a real life example. 31 billion in subscription a year. Okay. Who would you compare this guy to?
For streaming, is it?
Yes.
Disney, Discovery.
Correct. So let's look at Disney. Hulu Plus, HBO, right? Now the problem about Disney is a little bit complicated because Disney doesn't just do streaming, right? It also does other like theme parks and whatever. So what I'm trying, okay, maybe the best is HBO because HBO is kind of like HBO is not listed. Okay, let me see. What other companies? Hulu is also not listed. Okay, let's use Disney, but I'm not going to use this. Instead, I'll go and look for Disney revenue segment. Okay, so as you can see, right, there are linear networks, content, licensing. These are the different parts of the business. So if I were to compare, their media and entertainment business is kind of like a direct competitor to Netflix. Okay. So you see here, they made 14 billion in media and entertainment. But inside media and entertainment, of course, they have their own shows, whatever. So again, we have to break it down to compare apple to apple. Netflix on its own, a pure streaming content service guy, I don't think at this point of time anyone is a direct competitor, except for the likes of like HBO. But HBO also have their own TV programming and all that kind of thing. So pure streaming service, I would say the direct competitor is someone like Disney, someone like Hulu, and you've got to break down that number to compare apple to apple. Now, why is that important is back to the question of whether they are cheap or expensive, right? You cannot say that Netflix at $345 is cheaper than Disney. What is Disney's share price now? $100. Oh, Disney is cheaper. No. You see what I mean? Because Disney has other parts of the business as well, right? And what you got to do is you got to break down the segment of Disney's streaming service, how much money did they make, and you compare that to Netflix because Netflix is pure streaming. Am I making sense?
Yeah, yes.
Yeah. So again, the myth I want to debunk, price is arbitrary, shouldn't be used as a benchmark. Instead, look at an apple-to-apple comparison of the same kind of business and determine the value of the business, not the price. So you notice that whatever numbers that I've shown you, the last thing I talk about is price. But prior to that is about the business. What do they do? Do they make money? And all that kind of thing. So in a way, if I were to do a quick check, if Netflix wasn't a company that I was familiar with, this would be the 4 steps that I would take, the 4 questions I would take to determine whether, hey, is this actually worth my time to study more?
And John, you've also prepared a checklist that the users can download, right?
Yes, correct. This checklist, it's actually a very simple guide to probably I would say the 5-minute test. But I have to put a very important disclaimer. This is not after doing 4 questions and you straight away buy the stock. Please. There's definitely much more
Just a
check to
starter
this.
guide. This is just a starter guide because
Correct.
I think a lot of people when they look at stocks, they don't even know where to start. So look at it as just a taster for you to explore more, go deeper. Don't feel intimidated if okay, you don't know where to look. Here's where you can start. But don't stop there. It's just a starting place. Yeah.
Yeah. This is what I call the 5 minutes litmus test. You know the litmus paper?
Yeah.
Yeah, you just dip it in and see whether acidic or alkaline, right? So this is just like straight away, pump. Okay. It's not going to give you a straight out answer whether to buy or to sell, right? But
just
at least
the litmus.
Yes.
Yeah, that's the litmus test. Okay, maybe we'll just call it the litmus test, just the litmus test. Just to give you
the
a
stock
taste
litmus test. Yeah, why not? One hero stock
Yeah.
litmus test.
Correct. So if you guys want to have that 1 kilo litmus test, make sure to check out the link somewhere on the video or in the description. Download it and then make sure to look at it before you buy stocks.
Correct.
Okay, I think that concludes our first analysis of Netflix. I think I learned a ton. I'm not a very seasoned investor myself, so that's why I asked John to just get this started for people like me. And if you are someone who's just dipping your toes into investing, you might find this interesting as well. If you have any questions around this analysis, leave your questions below. We might address them in a future video.
Fantastic. If you like contents like this, remember to give the channel a like, subscribe to the channel, hit that notification bell so that when new videos are out, you'll be notified as well. Follow us on TikTok. There's short, snazzy content that it may tinker your senses, and hopefully that encourages your curiosity to actually learn more. So Louis and I will see you guys in the next video. Bye-bye.
Bye-bye.